Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Sunday, February the 24th, 2013, and here is this week's weekend review brought to you by wallstreettrading.com. Before we get into the video here, I hope you guys are enjoying your weekend so far. We got a lot of market action to cover, and we have a lot of things to take a look at. As you guys know, this week was a very interesting week here. We had buyers earlier in the week on Monday and Tuesday. We had sellers on Wednesday. Then we had some dip buyers come in into the last hour on Thursday, buy the market off the lows, and that continued going into Friday. So this week's going to be a little bit interesting to see who's going to take control. Are the bears going to step up and try to hold the price action below this 15, 16, 15, 19 area on the ES? Or all the bulls going to blast us right to that level? We're going to come back up to those highs around 1530 sometime this week. And if that was to happen, that would definitely give you a clue that there is definitely some sideline money sitting in the market waiting to get involved. And then we'll be back in a full bull mode looking for longs again. Right now we're kind of neutral. We're kind of in neutral. I wouldn't say we're bearish, but right now we're just in neutral sentiment right now on our end as far as with our trading goes and different type of setups that we're looking for. So in any case, let's go ahead and take a look to see how the markets close on a percentage basis across the board and in some key sectors here. We had the Russell 2000. Again, it was pretty much a flat week since we got that buying pressure that came in on Thursday in the last hour and on Friday. So the NASDAQ was down here 0.95%. The Russell 2000 was down 0.76%. The Dow Jones Index actually eked out a little gains here, closing the week up 0.13%. S&P 500 was down 0.28%. The crude oil was down 3.05%. Gold, GLD, was down 1.79%. Take a look at a couple of key sectors here. The retail sector was down 0.24%. The financials were down 0.11%. XLF, that is. The transports, the IYT, was down 0.05%. Transports have been holding up pretty decent. And volatility, nice little spike in volatility here. Volatility, VIX, was up 13.72%. So volatility is picking up. You can see here the market did recover most of its losses Thursday and Friday again here for the week. This was down a lot more, but they recovered it pretty well. And we see a nice little crude oil pullback, which is not bad. As these high gas prices, I'm looking at my neighborhood gas store, and they're charging $3.89 for unleaded regular gas, and we're talking about a store that's not even the top quality gas. It's just regular gas. It's not an ExxonMobil, a BP gas, where I'm pretty sure their regular gas over here in South Florida is maybe back up to $4 now. And that's definitely going to cause a burden to people that live in areas like I do in South Florida, where you need a car to get around. That's definitely going to put some crunch action on the consumers' pockets. So therefore, we're going to be looking at some of these retail stocks and some of these stocks that benefit from consumer spending, discretionary income, like the fast food stores and stuff like that. I'm gonna be doing a lot of more research in that later on today before our 9:30 p.m. live chart session that we will be having tonight, ladies and gentlemen. Make sure you get there. Go to wallstreettrading.com. Fill out the form for the 14-day free trial to get access to our chat room tonight at 9:30 p.m. We'll be going over charts. And if you have not been to our website yet, wallstreettrading.com, you can check it out there. And then here, before I go into the charts here for our beginning of our video session here, if you're located in the South Florida area and you're looking for a meetup group to get involved in, go to meetup.com and sign up to Wall Street Trading South Florida. I've done successful meetups at the colleges and the universities, and we're pretty much getting back into that right now, as we had to make some adjustments on our meetup page, and now we're back up and rolling. So if you're located in the South Florida area, that's going to be Palm Beach County, Dade County, or Broward County over here in South Florida. Make sure you check that out. In any case, let's go ahead and jump into the charts here. All right, I want to start off by taking a look at the SPY daily chart. One thing before we take a look at the actual candlesticks, notice how the volume has been declining since back here in September of 2012, and we have this nice key little volume trend line that's coming in here. All right, as you guys know, for you guys that have been in my chat room before, I watch this a lot when I see any volume patterns or trends that happen intraday, because then we're able to time the market intraday to figure out when the volume is going to start picking back up. And if you kind of use the same thesis behind this right here on the monthly time frame, you can see volumes pretty much, still in a steady decline, and looks to, go much lower, in the coming months here as we come into these levels. As we come into these little key levels up here on the ES. Now, one thing that can happen is volume, declines a little bit as we consolidate up here, and then volume kicks up here. What is it? What month is there? Come April, we start to see the volume pick up here and start to get some increased volume. Now, two things are going to happen. There's either going to be volume's going to be coming in to the sell side as we get rejected from these highs up here, or volume's going to be coming in as more money comes into the market and we start to hold above, say, this 145 level on the SPY, and we continue to tick higher and break through these levels. So it's going to be very interesting. We know we're just getting started here in the year. It's only February, so if you have not been doing well as the market's been kind of slow, don't worry. We still have plenty of time. We still have still have 10 months, of worth of action, trading action to make what you lost and much more back, or just to get involved if you've been looking for the market to pick up some volume here, so you could look for your type of strategies that you like to participate in. So anyway, the SPY, still holding that key 150 level, got rejected at 153.30 this week or so, which kind of lines up with the 153.41 high from the high back here in November. Got rejected. If we can get back above 153.41, we're going to be looking for 155. If you take a look at the weekly chart here, you can see we formed some type of little, I wouldn't say indecision. Well, yeah, it's like an indecision candle, kind of like a little doji action here, where the price action had wide range bar on the down, wide range wick on the downside, a little small wick on the top side, and a little body closing right here. Some may call this a spinning top, some may call this a doji. Just know all you have to really know is it's just an indecision candle. I mean, we had some sellers, we had some buyers, but then we closed in the kind of upper range. So it still favors the bulls a little bit, since we closed, say, in the upper 50, 65% range here or so. But just know, man, look where we're coming from. We had, last week we were talking about the fact that we had 1, 2, 3, 4, 5, 6, 7 consecutive up days, and now, 7 consecutive higher closes, and now we finally had a lower close here, as you can see the red dot right there on the weekly time frame. So now we jump into our daily chart of the SPY. All right, we did get a breakdown below that key 151.21 level. We came close to this 149.35 level, but buyers came in and bought the market back up here at 150, and now the SPY is back above this 151.25 level or so. But we still got to get above 152. If we can if we can get back above 152 and hold above 152, we should be able to make a move back up towards these highs right here. And if you take a look at the volume that came in this week to the sell side, was pretty heavy compared to the buying volume that came in, right? That's something to take notice of as well. Another thing to take notice of is that we, recaptured the 20-day simple and exponential moving average, and now we're trying to recapture these fast-moving averages that we were holding up for most of the year. And one more thing to take notice of is the fact that, you can see that we were holding above this 152 level, all right, right here on the closing prices. They broke us out, trapped some longs right here, 2 consecutive closes of lows to the downside, and now we're back up right here with a higher close, and this could possibly be a little pivot, which we're going to be looking to see what happens this week to see if this is going to be in fact a pivot or not, or if we're going to come right back down. We're still above a rising 200-day moving average, 50-day simple and exponential moving average, but 152 is going to be the level to watch this week. If we hold above 152 earlier in the week, we're going to be looking for these highs to get rechecked again up here towards 153.29 on the SPY. So that's how that's looking. Let's take a look at the triple Qs, starting off with the monthly time frame. The monthly time from the triple Q still in this nice little uptrend. You can see we're still basing above that key 65 level here. Let's take a look at the volume here. Volume as well for the triple Qs. You can see on the monthly time frames kind of dying out down here. We're going to be looking for volume to pick up in the coming months. And that's going to be same thing for the triple Qs. Are we going to be, are we going to break above this 50% Fibonacci line from the tech bubble sell-off right here that comes in around, 70, 50, 70, 30 or so? Or we're going to continue to consolidate sideways, and when that volume picks up in, we're going to get a crack below this key trend line. So there's a lot of clues right now. Again, we still have a lot of time ahead of us, so don't push too many buttons really until we get more direction in this market. But we're going to, we're just getting started here, guys. Plenty of good action to come in the coming months in the market here. So we're going to be definitely waiting for some of this volume to start picking up again. We had some nice action as far as volume goes this week, and you can see how much easier it was to trade once we get volume kicking in the markets, and it's, obviously this time it was to the downside. Maybe it'll be to the upside if we break out. We'll see. As far as the weekly chart of the triple Qs goes, I'm still looking at this little pattern right here where we have a possible head and shoulders pattern. You have your left shoulder, you have your head for this little bull trap that took place above this key 69 level. And then right now we have this possible rising bear wedge that could be in play right here on the weekly time frame. You can see they're holding the market up. They held the Qs back up above the 67 level. So 67 is definitely a key level to watch on the Qs going into this week. Holding above 67, we're going to be a little bit more neutral to bullish. Holding below 67 on the triple Qs, we're going to be a little bit more neutral to bearish. And if we break below 66, that's when the fireworks are going to come to the downside. If we get back above 68, that's when they're going to try to break us back up towards 69. That's when we could really get some nice buying pressure as well. So some good levels to work off of the Qs. We're just waiting for the market participants to let us really know which way they want to take it. All right? Which kind of tells us why you shouldn't really be pushing too much trading hard right now until we get them a little bit more direction, especially if you're trading the Qs or you trade a lot of technology stocks or any of these heavily weighted stocks that are in the Qs. All right, so let's take a look at the daily chart of the Qs now. And you can see here we were trying to break through that little supply zone that we've been mentioning for the past couple weeks here above this key 67.38 level. You can see we held a little bottom support down there around 66.17 because, as you guys know, if we break below 66.17, we have all this area right here for a gap fill with the gap base window or the gap fill, whatever you want to call it, being around 65.15, which is $2 more to the downside. If we were to not be able to get back above 67.38, that would be the next target to the downside after this little move down we had right here. So we could have a scenario where we sell off. Here we sold off this week. We get a little BS pop up, get rejected in this little supply area zone that we've been getting rejected in, put a little lower high in, and then we get that nice little whoosh down to 65.15, fill the gap, then we gauge a market from there. Or we could get another move where we get back above 67.38, establish ourselves back above 67.38. We want to see that volume pick in above 67.38 to the buy side. Then we'll be looking for a breakout over 68.25. Different scenarios that you want to have mapped out in your head so you can be a little bit more proactive and not reactive after the fact or kind of late. All right. But again, remember we had that little low volume action down here when the price action was trying to hang above this area that we mentioned is a supply zone and has been trapping longs there. And then now when the sell side volume came in, we had that heavy volume coming in, and now the buy volume came in with lighter volume. So just reading the volume analysis kind of gives you a little gauge of how sentiment in the market is right now, especially sentiment in the NASDAQ or the Qs here. IWM has been a leading index that has been leading us up to the top side. Let's see here. We held its 50% channel line right here from this little earlier channel that we were tracking. Let me take out these little price levels here so you can see. And, it held it pretty well. You can see we were holding that 50% channel line back here before we took off. Trapped some longs on this little bull, on this little bear rising channel, bull trap action right here where you have a rising channel. And usually when you have a rising channel and they get above it, it usually makes a fast move to the top side as people are starting, the buying pressure comes in. But look what happened here. They opened it up right here and just got it smacked down. So that kind of, brought price action below the moving average and kind of messed things up. But we're still holding the rising 20-day moving average here on the daily time frame. You take a look at the monthly chart. We're still above this key 87 level. Or I should say this key, this key 85 level. As you can see, this was a little minor bull trap action that happened for a breakout above this level back here in 2011. Little shakeout bull trap action that happened here early in the year until we finally broke above it. Last year, little bull shakeout trap action right here, back here in September. All right, and was that September? Yeah, back here in September. And then we finally broke above it this year, early back in January. So as long as we hold above 85 on the IWM, we're still in good shape here. All right, so that's how the IWM is looking here. Let's take a look at the dollar futures. Dollar futures have been getting some buying pressure after we recognize that this little possible, head and shoulders pattern failed. All right, we got bought back up here at 79. We've been talking about the dollar futures showing some momentum if it gets back above this 80.25 level and holds. And that's exactly what's been happening. And now the dollar futures is back, a short-term overbought, and it's back at this little supply zone from this little red band that we have right here from this little key price action that happened back here early in the year, earlier last year. All right, and next target on the dollar futures is 82 if it continues to get bought up, and then maybe back up here towards 83. You take a look at the weekly time frame, and you can see here that we're kind of really just, it looks like we're breaking this little nice little downward channel right here. So we really got to keep an eye on this dollar and keep an eye on that euro. I know they have that Italy vote going on this week, so we're going to be able to find out what the situation with that is. I'm pretty sure that's going to have some effect on the euro. So we'll be watching the currencies earlier in the week here, starting tomorrow overnight and early in the morning to see how how the ES trades around that currency price movement that's going to take place. Dollar futures monthly chart back with the key trend lines. Let's take a look at our euro chart now. As you guys know, we track the euro to gauge kind of the strength over there in Europe. We kind of gauge the European currency markets along with the U.S. currency markets and kind of see how that reacts with the S&P and the general equity markets. You can see here we've been getting that selling pressure that we've kind of been looking for since we broke down out of this little channel line, and we say that I've been saying that the next support level to watch on the euro dollar if it sells off is going to be around this 130.55 level, which lines up from this little prior channel line that we had here that broke out and then bull flagged and then broke out higher. All right, so it's going to be like a little back test, a little channel right there from our proprietary channel analysis, and it's also going to line up with the rising 200-day exponential moving average right there. So keep an eye on that. Again, the votes that they're having over there in Italy this weekend is definitely going to cause some market movement in the euro. We're going to see how the dollar reacts around that, and then we're going to see how the commodity sector and the equity markets act around that right there. All right, what else are we looking for? Let me take a look at something real quick here. This is a weekly chart, by the way. This was a bull channel break on the weekly time frame right there. And this was the big channel that we broke down out of here on the euro chart after consolidating it between it here and our proprietary channel analysis. And we got a lot of good stuff coming over here at wallstreettrading.com, guys. I can't spill the beans right now, but when things start to take place, if this whole big thing that we're working on happens, then we're definitely going to be able to provide more analysis when it comes to futures and currency. So a lot of good stuff. Make sure you stay in tune with what we got going on. Let's take a look at the commodities now, starting off with the gold chart. All right, you can see gold got a nice little bounce down here near the bottom of that channel. I would not be a seller of gold down here. Gold could probably chop around sideways and maybe trend lower, but I would not be looking to establish like a short position on gold on Monday unless we were below 1560 or something. We were looking for a further momentum breakdown. But right now, trying to short gold is really not to your advantage shorting gold down right here because the breakdown level was all the way right here. So most people that are short gold, smart money, they're short gold from 1640 or from our area that we talked about once we started breaking and holding below this key trend line right here from this little wedge pattern. So gold's probably getting a little short-term bounce. You can maybe see it bounce some of those little minors, which we'll take a look at here shortly. Let's take a look at the weekly chart of gold. You can see gold's down there near that bottom support level from the base that we were holding down here around the 1566 level. Also lines up with the bottom of the channel that we have. So, gold could definitely get a bounce this week. And then take a look at the monthly time frame. Monthly time frame shows us that we have some minor support around 1550, but we can also come down towards these 1500s, and then maybe we break 1500, maybe back down towards this 1430 level, 1420 level or so. But can't get too ahead of ourselves. We got to make sure to watch to see if gold's actually going to try to hold these 1550s. All right. If you guys are watching the GLD, you want to watch the GLD. Take a look at the monthly time frame. GLD is at this little support right here from the monthly time frame around 151.85. You can see a lot of the bodies that we've been having ever since back here in early 2011, that month of December, we've been holding this 151.85 level. So as long as we continue to hold this 151.85 level, this could probably try to bounce back up towards the middle part of the range. Take a look at the weekly chart here, and you can see the same thing here. We're at a key area on the GLD, guys, for the fact we're at the back test of this key trend line that we broke out of, and this is an official back test. We kind of back tested closer right here, but they bought it right back up minorly, then traded it sideways. But now I can say we're at an official back test with a little wick action against this key trend line that we had in here that we broke out of right here. All right, so gold's going to be very interesting to watch this week to see if the gold bugs are going to come in and buy it up or if they're going to continue to sell it off. And then the GLD daily chart right here trying to hold this 152 level. Let's take a look at that infamous gold miner, starting off with the monthly time frame. You guys know we've been tracking the gold miners pretty accurately to the downside as it's been breaking below some of our proprietary channel analysis that we've been showing you guys for the past couple weeks to months here. And now the GLD, I should say the GDX, is broke below this little support level around the 42.63 level here. You can see in the monthly time frame. And the real support level on the GDX is not really, in my opinion, down here to around 32.5. We break below that, then we're going to be looking at 21. But since gold's at a key area, you really got to watch to see what this GDX is going to do. You can see it's definitely in a downtrend as we have 1, 2, 3, 4 consecutive lower closes on a monthly basis, and now we're looking to see if this is going to be the 5th close this month if we close lower, which I think it is going to be. So then you take a look at the weekly chart, and the weekly chart, once we close, since we closed down this week, the weekly chart has had 2 consecutive lower closes on higher volume, which means that there could, in fact, be more selling to come. And we are below that key 40 level, and next support, like I said, is around 32.53. So keep an eye on the gold miners. I mean, if we take a look at the daily chart here, based on my proprietary channel analysis, I think support on the GDX miners is going to be somewhere down here around the 35 level as far as a short bounce and maybe that 32 level, but still looking pretty weak. Take a look at some of the gold miners. I mean, most of them already had their earnings. GG, has its key level right here, right below it, this 31.52 level. This 31.52 level that lines up with the lows from back here of last year. It needs to be watched pretty closely from back here on July 12th. That little low that we made right there. And if you take a look at the 60-minute chart, you can see that they're trying to bounce. This stock's trying to bounce. Take a look at ABX, another one that I like to watch. This one's been the weaker one out the group because it had this nice little sideways range, and when they were trying to rally, this one wasn't rallying at all, and they were still holding below that little range. And right now it's just bouncing. But the key level to watch on this one is going to be the $30 level there. Excuse me. And see on the monthly chart, we're sitting right on top of this 200-day moving average and around this key support right here around the 29 level as well. Taking a look at the weekly chart, and you can see the weekly chart is not looking too good, as we're already below last year's lows, and holding below 31 does not bode well if you're looking for this thing to get a pop to the top side, which means that this thing could definitely go lower. Next support that I see on this one is 27.50. So, in fact, if gold is weak next week, I'll be looking to short the gold miners more than now that they're still showing more conviction that they want to bring them down a little bit more. Obviously, you're going to be looking to short intraday rallies or something like that. But AEM, this one's another one. You take a look at Newmont Mining, which is another good in-house name that people like to trade when they're trading the gold miners. And this one came out with earnings. This one came out with earnings on. Let's see, they had earnings on the 21st, which was what 21st? What day was that? They had earnings on Thursday. They got the stock off, sold it down. Now you can see this one's going to be a nice, lovely sell below 40.50. Take a look at the weekly time frame. You can see it's breaking below its key, 42, 43 level here. Next support on this one really isn't down all the way down to like 36. You take a look at the monthly chart, and you can see this thing has some key support down here at 40. If this thing breaks below 40, this thing can get some nice selling pressure. And Newmont Mining has been one of the other weak gold mining stocks as well, ever since it kind of broke this little triple bottom area down here around 43.20 or so. All right, so that's something to keep in mind. Let's take a look at the 60-minute chart on this one real quick. This one actually looks pretty good. And yeah, what's it doing here? It's basically trading in a range between 40.50 and 41.50. Trapped some longs above 41.50, so we have maybe some participants that are trapped long above 41.50 in Newmont Mining. And this thing starts breaking below 40.75 and breaks below 40.50. It's going to be a short. I actually have this one on my short watch for Monday, tomorrow, if the gold miners and gold is weak. Keep this Newmont Mining on your watch radar here. SLV silver, it's trying to get back above this 28. Really needs to get back above 29 to get kind of neutral a little bit on silver. But right now, I don't see nothing there. Take a look at the weekly chart. Weekly chart broke below that key 29 level. Next support's down there around 26. Take a look at the monthly chart level. Next support, some nice supports around this 25.90 level. I'm gonna call it 26. Last commodity I have to cover. No, actually got to go over crude oil and then copper. Copper's at some support right now. You can see it's some support from my little key, yellow price zone. Also at support from right here. If it breaks below its key 350 level, next support isn't down until like $3.45. Could get a bounce right here in copper, which means you could probably see a bounce in FCX. You could probably see a bounce in SCC or some of those little copper stocks or right there. What else do I want to take a look at? All right, now crude oil. Crude oil futures. Starting off with the monthly time frame, you guys know that we've been tracking this crude oil futures, looking for that thing to make a nice little move to the top side ever since back here in November. That has been playing out pretty well, but it's having trouble breaking past 97.50. We're still looking for a big move in crude oil come by the end of the second quarter. All right, and you can see it's still in this nice little tight pennant pattern. So keep an eye on this crude oil. Crude oil is looking to make a big move in 2013. Whether not sure if it's going to be to the top side or to the downside, but the trend since we bounced off the lows is to the top side. Usually these patterns continue in the direction of the trend. All right, so maybe that's going to line up when the market starts to break out and crude oil is going to be the move. But at the same time, higher crude oil price and energy prices is not good for us consumers and for us people that like to spend, that have discretionary income to spend. So let's take a look at the daily chart. Take a look at the weekly chart of crude oil. You can see here, it's may want to pull back a bit to kind of back test this previous trend line that we had used as a momentum trend line, which means that it can maybe do a little shakeout below 90, do a little hammer, and then try to move back to the top side. So keep an eye on that. Crude oil could come back down in the short term a little bit there. As you can see, it's rallied all the way back to our little supply zone, hit the top of the supply zone here, and then now it's back below the supply zone. You really want to watch this 92 level. We break below 92. You really want to watch this level right here where we broke out before around the $90 a barrel level. USO, since some of you home gamers like the USO, we'll take a look at the USO here real quick. And USO sitting right on top of this little prior consolidation that it broke out here from the start of the year. USO breaking back below 33 will not be good. One thing to take note of, like I've been showing you guys in each of my weekend review videos, is how the crude oil futures were able to actually go to the top of the supply zone, and the USO was not. So whatever that means, it shows you that I guess maybe some of the little contango kind of messes it up with the pricing for the USO. But either way, that's just something that I took notice of. Let's see here. All right, so I think we're done with all the good stuff. Let's talk about some stocks now, some key stocks real quick here. Don't want to make this video too long. It's already done 27 minutes here. Apple, pretty much a stock to stay away from right now. It's not really showing you anything to do in it right now. I mean, we have a potential downward channel that could be coming into play here. Maybe they announce some news. A lot of people have been saying maybe they announce some news, the dividend or some news of something, buyback. I don't know. But right now, Apple looks like dead money to me. Take a look at the weekly time frame, still in a downtrend. Take a look at the monthly time frame, still has some more room to run before it comes into some of these little intermediate key term moving averages here. Amazon still trying to hold up a little bit decent. Amazon is still holding this key 262 level here. So keep an eye on Amazon. If Amazon can get above Friday's highs, maybe this thing can make a move back towards 270. Take a look at the weekly chart. You know, it has some of these little funky indecision candles right here with this little wicks on both sides and just closes in the middle of the range here. So we got to keep an eye on Amazon. Amazon's going to be looking to make a move here pretty soon. So I definitely have Amazon on watch for a move to see what it wants to do. Well, the time frame's still in an uptrend though. What else here? IBM, this is another little big cap tech stock. This one's kind of just grinding sideways. Got some nice buying pressure on Monday. Really didn't sell off like you would have expected it to on Wednesday or Thursday. Since this thing has not been able to hold its earnings gap and it's been fading the whole time. So it's actually kind of showing a little bit of relative strength to the market for the fact that it didn't get slammed down here to this little gap fill down here and actually held this level right here and has some people that may be trapped to the short side right here. So we're looking for IBM to continue high. You take a look at the 60-minute chart. This one has a nice little bull flag forming up here going into Monday's session. You can see it gapped up, traded sideways, broke out, up move, bull flag. This one back over 201 and holding. Looks good for a move towards 202, 202.50 maybe. We have this one on our radar. Then if you take a look at the 50-minute chart, you can see the pattern a little bit better here. Nice little sideways consolidation. Nice little sideways consolidation right here. This little flag failed, but it came right back and recovered. So now you have this little bigger flag, which is what I showed you guys on the 60-minute chart. And that's going to be this thing right here. And, these are little skills and strategies that we teach in our education. I'm going to be doing some webinars, free webinars pretty soon. But, this is all the stuff that you really need to know if you want to be ahead of the curve. How to really see these patterns, how to visualize, how to had a little visualization skill where you're looking at patterns that could play out in different scenarios and stuff like that. All right, so IBM looks a little bit interesting to me going into next week. What else here? Some of these retail stocks we got to keep an eye on. Some of these specialty retail stores, Lulu has not been doing anything; it's been trading sideways. So I'm watching Lulu to see if it's in fact going to break outside, break to the downside of this range, or it's going to start making its way to the top side. But right now, it's trading sideways. But the whole reason I'm looking at this is because, if energy prices continue to rise, a lot of people that have discretionary income to buy $80, $70 yoga pants, they're not going to be buying those $80 or $70 yoga pants anymore. So you got to keep an eye on that. Decker's another specialty retail store that's been acting kind of weak, trying to break down out of this little rising bear wedge pattern right here that's in play. They have earnings next week on Thursday, so keep an eye on this one right here, sitting right on top of the key 50-day exponential moving average. You can take a look at another Crocs, another specialty retail store. This one actually looks pretty strong. Crocs looks like it wants to get a move to this top side, and I'm just looking at these little retail stores here real quick. But yeah, Crocs looks a little bit interesting, believe it or not. What else here? Some other stores that are looking pretty good. Dollar Tree. These names are looking good. People can't afford to shop at Target or Walmart or stuff like that to buy some of their small necessities. They're going to go to the Dollar Tree store. So that looks pretty good. You see it's in this nice little range. They have earnings next week. Take a look at Dollar General. Dollar General breaking this nice little downward type of channel action that's been in play right here. Keep an eye on this one for a move to the top side. And, some of these other retail stores, Kohl's, these ones looking weak. Some of the discretionary, specialty ones here, like the watches and stuff like that. See, Macy's looks like it wants to roll over. Sears, another little department store. This one's trying to hold this key 47 level. What else? Home Depot's. This one gapped down. They had a downgrade last week and, got hit a little bit there. Has earnings next week. Lowe's, some of these special home retail stores. If the home builders are done making highs for the year, then these ones are going to come in. And Lowe's looks like it's the weakest one. I got Lowe's on the short radar for next week. The home builders, they pulled in this week pretty nasty. Inside action. Keep an eye on the home builders for some continued action to the downside. Toll Brothers there. Lennar is still holding. The past 2 days we got a bounce, still holding in the lower 50% range of the sell bar that came in on Wednesday. KBH, these ones as well. KBH at this key trend line right here. So definitely a lot of action. I know there's a lot of stuff to take, to keep on watching. You really just gotta, pick your spots tight, watch them accordingly. The energy stocks are holding up pretty well. ExxonMobil still holding above the key 88 level. One of the stronger energy stocks out there as far as these large cap integrated energy companies is Chevron, which looks to be pushing up its key trend line. Another stock that has a similar pattern like this that's holding up pretty well is Visa. Take a look at Visa. Visa's still holding this little base down here. It held the gap. Didn't even try to fill the gap. Held the gap support down here. And now it's coming into this little key trend line. Keep an eye on Visa above 160. This thing can get a nice little pop-up curve towards 162. We have that one on watch as well. And if you watch Visa, obviously you're watching MasterCard, which is holding up pretty decent. Still holding this little 510 level. It's pretty much just trading in the range between 510 and this 532 level. So it's trading in the $22 range here. So there's a lot of stuff, guys. I'm going to go over more stuff tonight in the video. Hope you guys are enjoying your weekend so far, and I'll catch you guys later on tonight or tomorrow morning if I can't make it tonight, which I'm going to try to make it tonight. So have a great day, guys. WallStreetTrading.com. Good stuff in the works. Come check us out later.